Welcome to JS Online Tuitions. So today in accounts, we'll be looking at the profit and loss. So most of the businesses, they mistake the profit they make after subtracting the cost of goods sold from the revenue that is generated from goods sold to be their final income. This makes these businesses to spend most of this money on personal matters, only to get surprised by the landlords coming on their door, asking them to pay rent, asking them to pay water bills, asking them to pay electricity bills. These types of businesses collapse eventually. So it is very important to look at the profit and loss account. So the profit and loss account, this is a financial statement that is prepared by businesses to show the net profit or loss of the organization. And the profit and loss account is only prepared after calculating the gross profit. So we can say the profit and loss account is the second part of the income statement. So let us write down these notes on our whiteboard. So I've said most of the businesses mistake the profit they make after subtracting the cost of goods sold from revenue that is generated from goods sold to be their final income. To be their final income. So most of the businesses mistake the profit they make after subtracting the cost of goods sold from revenue that is generated from goods sold to be their final income. So this makes these types of businesses to spend most of their money on personal matters. So these type of businesses spend most of their money on personal matters, only to get surprised by the landlords chasing them from the business buildings due to lack of payment of rent. Then we can say water bills, electricity bills, and many more. So this type of businesses spend most of their money on personal matters only to get surprised by the landlords chasing them from the business building due to lack of payment of rent, water bills, then electricity bills, and many more. So these types of businesses, they will collapse eventually. So these types of businesses will collapse eventually these types of businesses collapse at the end. So due to these reasons, these types of businesses collapse at the end. So due to the reasons that I've given, so it is important to look at the profit and loss. And I've said that the profit and loss account, this is the financial statement that is prepared by businesses to show the net profit or loss of the organization. So it is important to look at the profit and loss account. Then I've said the profit and loss account, it is a financial statement that is prepared by business. It is prepared by businesses to show the net profit or loss. To show the net profit or loss. And we can say that the profit and loss account is only prepared when the gross profit has been recorded or calculated. And we can say that the profit and loss account is the second part of the income statement. So here we only prepare the profit and loss when the gross profit or loss has been prepared. So we can say profit and loss account is prepared after calculating the gross profit or loss. And due to this reason, we can say the profit and loss account is the second part of the income statement. So the profit and loss account is the second part of the income statement. And since we have looked at the definition of the profit and loss, let us now look at on how we can calculate the net profit or loss. So the net profit or loss can be calculated by subtracting the operating expenses, which are also referred to as the indirect expenses, from gross profit. So we can use this formula. We can say net profit or loss is equal to gross profit minus operating expenses. So from this formula, we can take note that we can only find the net profit if gross profit is greater than operating expenses. And from this same formula, we can say that our net loss can be found when the operating expenses are greater than the gross profit. So that's the formula that we use. So from this same formula, so we have said net profit or loss is equals to gross profit minus operating expenses. So we can see that this first part of the formula, which is the gross profit, this is obtained after calculating the trading account. So we obtain the gross profit after calculating the trading account, and we said that the formula for gross profit is equal to net sales minus cost of sales. So let us now look at operating expenses. So let us look at operating expenses. So the first thing that you're supposed to know with operating expenses is that operating expenses are also referred to as indirect expenses. So operating expenses can be defined as these are costs that are incurred by businesses on services that help in running the organization. So that's the definition of operating expenses or indirect expenses. And this can be divided into three parts. So we have selling and distributing expenses, we have office and administrative expenses, then we also have financial expenses. So let us write down these expenses. So I've said that the first thing about the operating expenses is that these are also called indirect expenses. Then the operating expenses are cost incurred by businesses on services that help in running the organization. So that's the definition, and I've said that these operating expenses can be divided into three types. I've said they can be divided into selling and distributive expenses, then we also have administrative expenses, then we also have financial expenses. So we're going to start with the first one, which is selling and distribution expenses. So with this type of expenses, what are we talking about? So here we are talking about bad debts. We are also looking at carriage outwards. Then we're also looking at commission allowed. Then the other example, we have advertising. Then we also have packaging expenses. So these are the examples on selling and distribution expenses. Let us look at the second type of operating expenses. So here we have office and administrative expenses. So when we talk about office and administrative expenses, what do we mean? So here we are looking at insurance, we are looking at rent, then we are also looking at printing and stationery, we are also looking at salaries and wages, and many more. So these are just examples for office and administrative expenses. Then let us look at the other type. So the other type that we are having financial expenses. So for the financial expenses, here we are looking at repairs. Then we are also looking at depreciation of fixed assets. Then we're also looking at interest on loan. We are also looking at discount allowed. So these are some of the examples for operating expenses. Where you have questions, please ask in the group. Let us now look at income or gains. So most of the revenue that is generated by businesses is obtained from sales. But in some cases, the businesses can generate income which is not coming from sales. And such type of income is referred to as additional income or supplementary income. So whenever the business has additional income, those types of income have to be added to the gross profit before subtracting the operating expenses. So the first thing that we're going to do, we're going to add the gross profit plus additional expenses. After we find our figure, that's when we'll subtract the operating expenses to find our net profit or loss. So that's our income or gains. So I've said most of the income that is generated by the business comes from sales. But the business can have other types of income apart from sales, and those types of income are referred to as additional or supplementary income. So we can say the business can have other sources of income apart from sales, and these are referred to as additional income. Referred to as additional income or supplementary income. And how we record the additional income or supplementary income, they have to be added to the gross profit before subtracting the operating expenses. So the additional income has to be added to the gross profit before subtracting the operating expenses. And we can look at some of the examples of additional income or supplementary income. So if we are talking about examples, This includes, we have rent income, then we have dividend received, then we have discount received, then we have commission received, then we also have interest on deposit. So interest on bank deposit. So these are examples of additional or supplementary income. Where you have questions, please ask in the group. So if we are to consider additional or supplementary income, we have to adjust our formula for net profit or loss. So net profit or loss is going to be equal to gross profit or loss plus supplementary income, then minus operating expenses or indirect expenses. So that's going to be the formula. So we can say net profit or loss is equal to gross profit plus supplementary income. So you have to put gross profit plus supplementary income in brackets, then minus operating expenses. So this is going to be the formula. So let us now look at this example that is going to help us to calculate the gross income, to calculate the operating expenses, to also calculate the net profit or loss. So the example reads, Hope had a gross profit of 890 during the year ended 31st September 2023. The following balances were also obtained. So we have rent amounting to 150, advertisement amounting to 100, wages and salaries amounting to 75, insurance amounting to 100, stationery amounting to 70, discount allowed amounting to 250, rent received amounting to 105, discount received amounting to 55. So we are going to start with our first question, which is gross income. And the formula for gross income is gross profit plus supplementary income. So let us identify our gross profit. Our gross profit have been given as 890. Then plus our supplementary income. For supplementary income, we only have two. We have rent received amounting to 105. We have discount received amounting to 55. So we're going to see 105 plus 55. So we'll say 890 plus 105 plus 55, we're going to have 160. So 890 plus 160, we're going to have 1050 kwacha. So that's going to be our answer. Let us look at Roman numeral 2. We have operating expenses. And for operating expenses, we have said that these are costs that are incurred by businesses on services that help to run the business. And we have said examples of operating expenses, we have selling and distributive expenses, we have administrative expenses, then we also have financial expenses. So let us find these expenses. So operating expenses, our expenses there, we're going to have rent, we're going to have advertisement, we're going to have wages, we're going to have insurance, stationery, and discount allowed. So we're going to have 150 plus 100 plus 75 plus 100 plus 70 plus 250. Then to just classify these types of expenses, we can say rent there, this is administrative, advertisement, this is selling and distribution, then wages, that's administrative, insurance, that's administrative, stationery, that's administrative, then discount allowed, that's financial. But that's not important. Our important thing here, we're just supposed to calculate operating expenses. So we're going to say 150 plus 100 plus 75 plus 100 plus 70 plus 250. Our answer, we're going to have 745. Let us look at Loma numero 3. Loma numero 3, we are supposed to calculate the net profit. And we said that the net profit can be calculated when the gross income is greater than operating expenses. And we can see that our gross income there, we're having 1,005, and this amount is greater than operating expenses, which are amounting to 745. So say gross income minus operating expenses. So there our gross income we have calculated as 1,050. So 1,050 minus operating expenses, we are having 745. So 1,050 minus 745, we're going to have 305 as our net profit. So where you have questions, please ask in the group. Let us now look at the formatting of the profit and loss account. So let us now look at the formatting of the profit and loss account. So the first thing that we're starting with is the gross profit. So we're going to put our gross profit here. Then we're going to say add income. And this income can be rent received, rent income, can have rent income. Then we can have dividend received. Then we can have discount received. Then we can also have commission received. Can also have interest received. So these are some of the examples of income. So when we add these, we're supposed to have total income. And our total income is going to appear there. So we're going to add our gross profit plus our total income. So we're going to find the gross income. So the total that we get after adding the gross profit plus total income, we're having gross income. Then we're going to say less expenses. And for the expenses, we can have rent. We can put our rent there. We can have stationery. We can also have insurance. We can have carriage outwards. And many more. There are a lot of expenses. So when we add these expenses that we are having, we're going to have total expenses. So we can say total expenses. Then since we have our total expenses, we can subtract the total expenses from gross income, and the answer that we're going to have is net profit or loss. So say net profit or loss. We are going to have our answer there. So this is the formatting of the profit and loss. Where you have questions, please ask in the group. So let us continue looking at the profit and loss. Now we're going to consider the example that we gave for Hope to calculate our profit and loss account. So this is the example that we had. So the question reads, Hope had a gross profit of 890 during the year ended 31st December 2023. The following balances were also obtained. We have rent amounting to 150, advertisement amounting to 100, wages and salaries amounting to 75, insurance amounting to 100, stationery amounting to 70, discount allowed amounting to 250, rent received amounting to 105, discount received amounting to 55. So we have been told to calculate the profit and loss account for Hope. So the first thing that I have done is to write down the title, and the title is going to read Hope Profit and Loss Account for the year ended 31st September 2023. And the first thing that we're going to do is to record the gross profit. In the gross profit, we have been given as 890. So we're going to put our 890 here. Then we have to identify from our questions if you're having supplementary income. And you're having additional supplementary income, we're having rent receipt and discount receipt. So we are going to say add income. So the income that you're having, we have rent receipt, amounting to 105. Then we have discount receipt, amounting to 55. So when we add our 105 plus 55, we're going to get our 160. So our 160, that's going to be total income. So say total income. Then we can add the gross profit plus total income to get gross income. So say 890 plus 160, the answer that we're going to have 150. Since we have calculated our gross income, we can say less expenses. So less expenses. So we have to identify our expenses in the question. So identifying the expenses in the question, we have rent, advertisement, wages and salaries, insurance, stationery, discount allowed. So we're going to say rent. Rent, we had 150. Then advertisement, 100. Advertisement, 100. Then wages and salaries, we'll say wages and salaries amounting to 75. Then we also have insurance 100. Then we have stationery 70. Then we have discount allowed 250. So we'll say 150 plus 100 plus 75 plus 100 plus 70. We're going to have total expenses. So our total expenses, we're going to have 745. Since we have calculated our total expenses to be 745, so the next thing we are supposed to calculate the net profit or loss. And I said that you can find the net profit when the gross income is greater than total expenses. Then we can find the net loss when the total expenses are greater than the gross income. So considering in our case, our gross income there is greater than the total expenses, that means that we're going to find our net profit. In our net profit there, we're going to say 1050 minus 745. We're going to have 305. So we're going to have 305. So that's how you can write down the profit and loss for Hope. So to just summarize the profit and loss account, the profit and loss account is a financial statement that is prepared by businesses to show the net profit or loss. And this financial statement is prepared after calculation of the gross profit. And we can say that the profit and loss account is the second part of the income statement. And the formula that we use when calculating net profit or loss, we say net profit or loss is equal to gross profit minus operating expenses. But in the case whereby you have additional or supplementary income, you're supposed to add additional supplementary income to the gross profit. That is going to give you the gross income. Then after calculating the gross income, you say minus operating expenses. So that's a summary of the profit and loss account. Where you have questions, please ask in the group. And the next time that we're going to meet, we're going to look at the balance sheet. Thank you very much for your time. God bless. Bye-bye. So this program has been brought to you by Jos Wale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless.